Hi, Jonathan York from Bay Financial Partners, looking at investment markets. Pretty interesting time in the US, obviously. President Trump is sort of coming out and sort of signing executive orders left, right, and centre. Now, it's true to his word, he did impose tariffs on Canada and Mexico, 25%, but then sort of a couple of days after that, he then delayed that for a further month. And that was on the back of Mexico saying they would defend the border a little bit stronger. And also the Canadian border as well, potentially fentanyl coming through there that Trump claims. But then, quite ironic, he did come out and say, the current trade deal with Mexico and Canada was one of the worst ever, and he doesn't know who negotiated that trade deal. It was actually him in his first term. Now, the US economy is still pushing on at a pretty good rate. Growth is okay, inflation's coming down. Jobs data was potentially a little bit weaker than anticipated at 143,000 versus around 175 expected. But, it's still a healthy number. And there was an upward revision to November's number as well. So now with the Fed leaving rates on hold in January, it was pretty interesting that latest commentary coming out of Jay Powell, the Fed chair, says the Fed's really in no hurry to increase interest rates given the current economic data. Now that could put him on a collision course with Trump because, he wants lower rates. But now, potentially the Fed is only looking at possibly 2 interest rate cuts this year, maybe only 1, just depending on the data that comes through. Now, if you wind back about sort of a couple of months, the end of last year, the market was pricing in around 4 Fed interest rate cuts this year. So that and potentially Trump's policies in terms of tariffs with the inflationary implications, we're seeing the 10-year nudge up to 453 and the 2 years currently around 430. So on that 10-year, that's up around 50 basis points over the last 2 months. Trump has also come out with a few interesting comments as well, saying that US is going to take over the Gaza Strip and will then look to manage that. And, all the Palestinians and sort of refugees should be housed in other countries. Potentially the other issue as well is the growing sort of influence that Elon Musk has over the sort of administration. Indeed, the latest Time magazine, its front cover was a picture of Musk sitting at the resolution desk, which is obviously, the president's desk in the Oval Office. And surely there must be some sort of conflict of interest with a major CEO of major companies having access to the Treasury's payment system. The other potentially interesting point is that with the Philadelphia Eagles winning the Super Bowl, last time that happened, the US markets had a pretty disastrous year. Now oil has come back to just below 71 bucks and change. Now the UK, again, the data out there is sort of mildly encouraging. I know it's coming off some very low bases, but there is a little bit of sort of hope at the end of the tunnel. And potentially if the Bank of England do cut rates at its next meeting as well, that might just give the economy a further little boost. Although potentially, you've still got the issue with the tariffs that Trump may or may not impose. Now, likewise with the EU region as well, potentially the US tariffs, could have a major impact on the GDP. But that wasn't enough to dissuade the central bank from cutting interest rates. They cut by another 25 basis points to take the cash rate down to 275. Now in Australia, with the latest inflation data, sort of falling, potentially the Reserve Bank could be looking at cutting interest rates. Although with Trump announcing, tariffs on steel and aluminum, that might have some implications for the Australian economy. But again, as the RBA has yet to cut interest rates, we expect them to cut interest rates in the next sort of month or so. But probably only by 25 basis points. Now here in New Zealand, just a week away from the next meeting of the Reserve Bank, where they're expected to cut interest rates by 50 basis points. Potentially, given the state of the economy, it could even be 75. But again, potentially Trump's tariffs could have some implications for New Zealand. Certainly Fisher and Paykel have, got a little bit of exposure out there to Mexico. Though with the New Zealand dollar falling and obviously oil being priced in US dollars, that is having some inflationary implications out there at the pump. Latest unemployment data was again a little bit higher there, just creeping over that 5% of 5.1%. But that was pretty much fully expected and was, pretty much signaled from the Reserve Bank around sort of 12 months ago. But interestingly, sort of business confidence and surveys are just beginning to show a little bit of optimism out there and a little bit of light at the end of the tunnel. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.